Welcome to another video on investing in stock. In this video, I'll be talking about common mistakes beginners make when investing in the stock market. Now we have the Wall Street in our pockets thanks to most of these online brokers actually launching for people like me and you to invest in the stock market. We don't have to walk in the Wall Street these days for us to actually invest in the stock market. For this reason, some of us, we actually do make mistakes, especially when we don't have people pulling us through, like showing us the right direction. We make mistakes, like I've made some myself, and I've learned from my mistakes, and I've researched more to see what other mistakes are there that people fall victim of, so I don't make these mistakes. So I've decided to bring these mistakes together in this particular video and advise you guys going out there so you avoid these mistakes if you're thinking of investing as a beginner. However, before I start talking about these mistakes, I will encourage you, if you're new to this channel, please subscribe to this channel, hit the notification bell, and smash the like button. Now, without wasting much of your time, I'll just go straight into the mistakes in no particular order. I'll just be talking about these mistakes and look for ways for you to avoid them. The first mistake that we actually make as beginners is actually following the hype. Because we do not understand the parameters, the trend, how to find the stock, how to find winning stocks, and the whole lot. We find out that we face most of our time going on Facebook or YouTube or different places, watching CNBC and listening to things that are actually going on. Now, this is a good way for you to actually source out the particular organizations that you need to invest in. It's a very good way if you're not thinking of investing in the things you know. However, if you follow the hype of a particular stock because people are talking so much about it, or because it's rising and you decide to invest, you may find out that you will be stuck somewhere. This is what happened to most people, most beginners that actually try to invest in GameStop and AMC. Because of the hype, Reddit, someone said, oh, this stock has been short selling, so it became the people versus the hedge fund, the short sellers. It was a war. Some people actually tried to capitalize on that profit, and they bought when it was actually high because they were beginners. Now, the downside here is you may not know when to actually come out of that stock because you're not a professional, and most of these professionals, they know when to push and when to dump this stock. So a whole lot of people got stuck and they got slaughtered. There's this saying, they say pigs get slaughtered. So some people actually got slaughtered because they got stuck in this particular point and couldn't sell. And so as a beginner, forget the hype. When they talk about the hype, ignore it. Just do your due diligence. Keep doing your due diligence and invest in the things you actually know. Forget what's going on. Forget about making money real quick because others are actually making money. They are actually pumping and dumping the stock, whereas you do not know what is really going on. So avoid that and do the things you actually know. There will be a time where you can identify this stuff yourself and you'll be one of the people actually pumping and dumping. So if you're a beginner, forget about people pumping and dumping and making quick money and ignore it completely. Do not follow the hype. Now, the second mistake we actually make is the fact that we time the market a lot. A lot of us will come in, and this actually happened to me, timing the market. You come in and you think, okay, this is not the right time for me to actually buy this particular stock. I think it will pull back, without actually doing any proper findings. Because at this point in time, as a beginner investor, you may not be conversant with candlestick charts and the whole lot. You will not understand resistance and support, all these little things that you need to know about reading charts. You just come in and you're basing your judgment from emotions that, oh, this is going to pull back, this is going to pull back, and you find out that it's pumping up and you're missing out completely. You're missing profits. So it's wrong for us to actually time the market as beginners. We're always going, if you've done your due diligence the right way and you think this is a particular organization you want to invest in, it is ideal for you to go straight invest. If it pulls back and you know it's a long-term play, that's where you see opportunity and you capitalize on the opportunity. You buy more when it pulls back. If it doesn't, you just leave your price, you just leave your money where you want it to be, and if it grows, fine. If it doesn't, if it stays there, fine. If it pulls back, you capitalize, and then you have your average cost in there, whereby when it pulls back, you check the difference. Let's say you bought one stock for 130, and then it pulls back down to 110, and you bought the second one at 110. You find out that your average for these two stocks works out to be 120. That's how it balances itself. So I'll encourage you, rather than you time the market, invest if you've done your due diligence the right way. So the third one, a whole lot of people actually speculate. Like, this is normal. Like, we speculate a lot. People are still speculating. Before I started investing, I was actually speculating as well. Sometimes we just sit back and we say, there's a crash coming, there's a crash coming. How do you know there's a crash coming? Who told you there's a crash coming? Like, before the pandemic, yeah, we had opportunity for us to like invest in the stock market, but we didn't invest at that time. And then the pandemic happened, and we were like, oh, there's a crash coming, but we're still waiting for this crash. Whereas the people that were already in the stock market, the people that were already investing in the stock market, they were ready. And as soon as the pandemic happened, some of these organizations crumbled, and they capitalized at that point in time. They improved their portfolio, and right now these guys, they've grown their portfolio over 300%, over 400%, over 500%. Whereas this is when some of us are actually looking for a way to join in and capitalize. So stop speculating. Even if there's a crash, it's normal. Now the fourth one is for you to actually avoid the advice you get from YouTube and CNBC, Facebook, all the stuff. So CNBC is okay. Like YouTubers, when you're getting, even the YouTubers, if you look, there's a disclaimer there, or some of them even tell you out that this is not financial advice. You may lose your money. Yeah, they're just making this video for educational purposes, for entertainment purposes. Like, that's what we do, making these videos. I'm not saying that recommendations that we give or recommendations that you hear on YouTube are actually wrong. All I'm saying is, if you need to take this recommendation, make sure you're doing your due diligence to back that up. Do not just take the word of a YouTuber saying invest in X and X, and you jump into X and X without you doing your due diligence. You may find out that this particular YouTuber may be a day trader and is just seeing potential for that day. That's why he's making this video. Or he's seeing potential for the next day. That's why he's making this video. And your strategy is completely different. Maybe your strategy is about long-term investing, which is different from his particular strategy, telling you to buy this particular stock. So you need to do your due diligence before investing. Do not just take the words of a YouTuber or the advice you see on Facebook or other social platforms that are out there. Do your due diligence. Now, this leads me to the next one, which is day trading. As a beginner, avoid day trading. I do understand some people, you have a whole lot of disposable income right now, and you're thinking, okay, as a beginner, I can day trade, I can invest in here, make money here the next day. No, most people who day trade actually lose money. Most people. You have to be a professional for you to know how to day trade. Remember, you've never worked in the Wall Street before. Remember, you've not done any financial course that covers stock investing. Most of the people that actually day trade, like, they've got experience in the stock market, they've been doing it for years. You're just starting. Avoid day trading completely. Have a strategy long term. Even if you want to use this as a source of income short term, I would advise you to invest your money and give room for weeks or months before you sell off. So it gives you this ability whereby you can actually ride the storm. Even if you invest and it goes down, you just have your price point somewhere and you have your low somewhere. So you think of it this way, that okay, if it drops 5%, I sell within 2 weeks. Or if it drops, if it goes high 10% and gets to 10%, I sell and make my money. But you give a time frame. Just avoid day trading completely, or avoid trading and just build, think long term until the time comes for you to actually start day trading. Do not day trade as a beginner. So that's it. The next one on the list is falling in love with a particular stock. Do not actually fall in love with a stock. Most people find themselves falling in love with a particular stock. I've actually seen a portfolio before, and this guy just bought 90% of his portfolio based on Tesla. He's got over 100 shares of Tesla, like, to be honest with you, over 100, and the rest on his portfolio is just one. And then I'm looking at what's going on. He's made money, no doubt. Tesla made a whole lot of people money this year. But if he's a long-term investor and is investing in Tesla because he so much believes in the business, if anything happens to Tesla, that portfolio will go down really quick, and that's him losing his money. So invest in different organizations. It's better. You'll still make the same money. Let's say you've invested in Amazon, Tesla, and Microsoft. It gives you a diversified portfolio and a balance, a cushion. So in case anything happens to Amazon, you know Tesla and Microsoft will push you high. Or if anything happens to Microsoft, you know the other two will balance itself up. And with this, you have a relaxed mind. You can go to bed sleeping in the night and knowing very well that your money is secured. So we should avoid falling in love with a particular stock. Now, the next mistake people make is the fact that they borrow to invest in the stock market. I'll just put this into two, like borrowing to invest in the stock market and also having a debt before investing in the stock market. This is a no-no. Yeah. So it's not advisable for you to actually borrow money to invest in the stock market. Except there's no exception here. Like, let's use you owing a debt, for example. Let's say you have a credit card. You take money from your credit card to invest in the stock market. Yeah, you have to give a return of 16% from your credit card, and the stock market is giving you a return of 8 to 10% average in 12 calendar months. You find out that the money you borrowed, you're actually funding your credit card, and yet you're not making any gain. So avoid borrowing money to invest in the stock market. And before you invest, make sure that you have your debts paid already before you invest in the stock market. Can't stress that enough. Now, these are all the mistakes that are available there. I encourage you, if you're new to this channel, please subscribe to this channel, hit the notification bell, and smash the like button. Thank you very much.